Okay, so let's start with a picture. When you think bank or banker, what actually pops into your head right now? Is it still, the classic image, solid buildings, suits, maybe a loan officer, that kind of thing?
Or is it starting to shift? Are you seeing maybe lines of code instead?
Yes.
Algorithms, big digital platforms.
Exactly. Welcome back to the deep dive. Today, we're really getting into a report called Banking. The future is tech driven. And this isn't just like banks getting a few new computers.
No, not at all. The analysis suggests something much more fundamental. It argues the whole global banking sector is sort of rewriting its own DNA.
Moving away from physical capital, the report says, and becoming much more about digital code and data.
That's the absolute core of it, based on the material you shared. So
Okay.
our mission today is to unpack that. What does it really mean for banks to start looking like tech firms? And how are bankers' jobs changing? Especially, looking out towards 2030, 2035.
Right. We want to get you a clear picture of these shifts straight from this analysis. Let's dive right into that main idea, this big shift from capital to code. The report uses this then versus now comparison, which I found pretty stark.
It really highlights the transformation, doesn't it? Think about traditional banking, let's say, before the 2020s. The foundation was physical capital, right? Money, assets you could touch, and of course, customer trust built up over time.
And the products were straightforward: loans, deposits, credit cards.
Yeah, the usual suspects. The whole model was very branch heavy, very focused on navigating all the compliance rules. And the people, mostly finance backgrounds, MBAs, economists, the folks in the branches. Risk was mainly about checking credit scores, deciding who gets a loan.
Okay, that's the bank most of us know or knew. But this report paints a picture of an emerging bank, the tech-driven bank of, say, 2025 to 2035. What does that look like?
Well, the core assets change. It's less about the physical stuff and much more about data and the digital infrastructure. The products themselves become digital. Think APIs, digital wallets, even totally new things like tokenized assets.
So not just online banking, but fundamentally different products.
Exactly. And the operating model flips. It's not about branches, it's platform-based. Driven by APIs so different systems can talk to each other seamlessly.
And the workforce.
That changes dramatically too. You see way more developers, product designers, quantitative engineers, quants, and risk management. It becomes much more algorithmic, using sophisticated models to spot risks in real time, often automatically. It's a shift from tangible to digital through and through.
Okay, that sounds like a huge transformation. Why does the report argue this is basically inevitable? What's pushing banks in this direction so hard?
There are some major forces at play. First, you've got intense competition. Fintech startups are nibbling away at specific services, often doing them better digitally.
Faster, maybe more user-friendly apps for certain things.
Right. And then there's the big one, big tech wading in.
Companies like Google, Apple, Amazon, you mean?
Precisely.
Hmm.
They're not just tech companies anymore, are they? They're embedding financial services, payments, credit, even insurance directly into the apps and platforms. Millions, even billions of people already use every day.
That's got to be immense pressure. They have the user base, the tech.
It's massive.
Hmm.
The report actually mentions a stat, something like over 70% of financial consumers are already using at least one fintech app.
Hmm.
So this isn't some future possibility. It's happening right now. It changes what customers expect.
Okay, so competition is one driver. What else?
The second huge driver is the tokenization of financial instruments.
Right, let's unpack tokenization a bit.
Uh,
For anyone listening who isn't deep in the crypto or blockchain world, what does that mean here?
Sure. So think of it simply as essentially yes. And doing that can make it potentially much faster, cheaper, and easier to issue, trade, and manage that asset. The report actually projects that by 2030, tokenized bonds and stocks could make up maybe around 10% of all global assets under management. That's a significant slice.
Wow. And it bypasses a lot of the old infrastructure, I imagine.
It really does. The source mentions platforms like Securitize, Tokeny, Fireblocks on the place. These are examples of the new plumbing being built for digital assets, replacing older systems.
And this directly impacts jobs, right? The report mentioned bond syndicators.
Exactly. Someone whose job was managing the traditional bond issuance process now needs to understand how to structure and manage these tokenized versions. They're becoming digital asset structurers, different skills needed.
Which leads nicely into the third big force the report highlights: AI and automation. This seems to be everywhere, but in banking, the potential impact feels enormous.
Oh, absolutely. AI is moving way beyond just chatbots. It's automating really complex stuff now. Things like KYC, know your customer checks, verifying identities much faster.
Speeding up loan decisions, trading.
Yes, loan underwriting, automated trading strategies, even handling regulatory compliance reporting. It's taking over tasks that used to require lots of manual effort.
I remember seeing that JP Morgan example in the source material, something about contracts.
That's right. Their AI system, contract intelligence, reviews legal documents. The report claims it does this about 360,000 hours faster than humans doing manual reviews.
360,000 hours. That's not just efficiency, that's a game changer.
It completely transforms the workflow. And the report suggests AI is only going to do more. Think advanced fraud detection, predicting market movements, using large language models, LLMs, for sophisticated customer service, maybe even debt recovery.
It really changes the how of banking work.
Fundamentally. And it dictates the kind of skills people will need going forward, managing, overseeing, and working alongside these AI systems.
Okay, so let's talk about those people, the bankers themselves. If code and AI are rewriting operations, what does this mean for their roles? The report gets pretty specific about how jobs might evolve by the 2030s.
Yeah, it's less about elimination and more about evolution. Take a traditional relationship manager. Their job was building personal connections, maybe over lunch or coffee.
Right.
Their future equivalent might be more like a digital relationship designer, someone who designs automated customer journeys, manages workflows, maybe even helps train those LLMs to interact effectively with clients. Different focus.
And the bond syndicator we talked about, they become a tokenized debt structuring analyst needing to know blockchain tech, token standard.
Exactly. Or the risk officer, who used to analyze credit reports manually. They might become a quant risk modeler. They'll need Python skills, machine learning knowledge to build and manage predictive risk models.
Compliance analyst becomes a smart contract auditor.
That sounds very specific.
It is. It means they need to understand RegTech technology built for regulatory tasks, but also the actual code, like Solidity, which is common for smart contracts. Maybe even advanced stuff like ZK snarks, which are cryptographic tools for privacy and verification. Wow. Even operations executives could become AI workflow orchestrators,
Right.
managing APIs, prompt engineering, basically telling the AI what to do.
Pretty much. And treasury managers dealing with cash flow might become on-chain liquidity strategists, needing to understand Web3 and DeFi, decentralized finance, to manage digital assets effectively.
It sounds like even the support functions, HR, legal, are adopting tech tools and structures, becoming more like tech companies internally.
That's what the report indicates. It's a shift across the board.
And the numbers seem to back this up. JP Morgan already having over 35,000 technologists. That's, what, 12% of their workforce now?
Yeah, and you see firms like Goldman Sachs actively hiring AI scientists, blockchain specialists, developers for their digital push. It's not just theory.
And the projection. By 2035, over 30% of large bank employees in tech-focused roles. That's a huge shift in the workforce profile.
It really is. It implies a fundamental change in the required skill set for anyone wanting to build a career in banking.
So what are those key skills? The report lists a few core tech competencies becoming essential.
Yeah, it flags things like Python and SQL, crucial for data analysis and automating tasks. Solidity, as we mentioned, for smart contracts. AI prompt engineering becomes important for working with AI.
Understanding APIs and microservices, too, I suppose, for connecting all these systems.
Definitely. Plus, blockchain architecture, how to audit smart contracts for security and compliance, and understanding how liquidity works in DeFi. These are becoming the new foundational skills, alongside finance knowledge.
And this isn't just happening in, say, global financial hubs. The report gives examples from places like Canada and Australia, showing these trends are widespread.
Absolutely. It makes it more concrete. In Canada, banks like RBC, TD, BMO are reportedly hiring tech talent aggressively, building digital platforms, using AI for risk, experimenting with payment tokenization.
And in Australia, similar story.
Yeah, banks like CVA and NANB building their own AI labs, running blockchain pilots, looking into central bank digital currencies, CBDCs.
So a digital version of the Australian dollar, potentially?
Could be. And importantly, in both places, they're shifting from old, slow IT systems to more agile methods, DevOps, just like you see in tech companies. It shows the operational model is changing on the ground.
Okay, let's pull this all together then. Based on this deep dive into the report, what does the future banking landscape look like, maybe around 2035? And what does it mean to actually be a banker then?
Well, for the banks themselves, the report suggests they'll operate much more like tech platforms. Think software as a service, or SaaS.
So selling access to services via software.
Right. monetizing APIs, data streams, not just loans and deposits, offering financial products that are programmable, that can be embedded into other apps or systems. Their whole structure, their culture becomes tech first, even while being regulated financial players.
And for the people, the bankers.
They need that hybrid profile, deep finance expertise plus tech fluency. They'll be working alongside AI, interacting with blockchain protocols directly.
And maybe measured differently, not just on financial returns.
That's the idea. Tech metrics might become just as important: product velocity, system uptime, user engagement, alongside the traditional financial KPIs.
The outlook numbers for 2035 in the report really drive home the scale of this. You mentioned tech roles potentially tripling.
Yeah, from around 10–15% today to maybe 30–40%. Tokenized bonds growing from almost nothing to maybe 8–10% of the market. AI automating over 75% of operations compared to maybe 20–30% now.
And core banking systems shifting from the current mix of old and new.
To being mostly decentralized and API-based. It paints a picture where the traditional, purely finance-trained banker evolves into a tech-enabled specialist. It's a fundamental rewiring.
So the main takeaway from this deep dive, drawing directly from this report, seems pretty clear. Banks are undergoing a profound transformation. They're really morphing into technology companies that just happen to have banking licenses.
Driven by digitization, tokenization, AI, and maybe DeFi down the line.
It's forcing a complete overhaul of their operational DNA.
Absolutely. And the report's conclusion feels like a direct message to everyone involved. If you're in banking, or even just interact with banks, you need to adapt. Learn the language of code, understand smart contracts, treat data like it's the new capital.
Data is becoming currency.
That's the crux of it.
Which leaves us with a really interesting thought to chew on. If data is truly the new currency for banks, like this report argues, how does that change your relationship with your bank? What does it mean for your financial data, its privacy, its security, maybe even its value in this new tech-first banking world?